Dan, Brad, how's it going today?
Hey Scott, happy to be back on the Q&A circuit, doing some good work here with the team. Brad, how are you, my friend?
I'm doing good. We find ourselves here Wednesday afternoon. Doing good, man.
Wednesday afternoon, again, doing the, the dealio.
Showing our wares.
Showing a little bit of our wares. Guys, ladies and gentlemen, we want to thank you for coming in, listening to us. Got a great presentation for you today. I think one of the ones that, as Brad and I were thinking about what we're going to do, I was laughing at myself that I myself was not doing enough of what I'm about to show you, and I took that in stride and been doing it kind of ever since. So lots to showcase today. Let's get started with a disclaimer. Trade Ideas is not a registered investment advisor. All the information that you're going to hear today is for educational purposes only. For regular registered investment advice, please consult a registered investment advisor. So Brad, I'm going to jump us out. Yeah, I'm going to say hello, don't be shy.
Hey, buddy.
So I'm going to jump us out. I'm going to jump us out of the PowerPoint and into the AI. And first thing I want to say is that guys, trading is war. It's a type of warfare, not unlike spiritual warfare or physical warfare, but it is a type of warfare. And I'm just going to bring up the S&P here. So when you're in this situation where, you have these types of moves, I mean, obviously there was just something very violent that happened from here, 293 to 233 right here. This is a type of situation, and this only happened let's look at it. So here we're talking about September of 2018. We're cruising around. Then these gigantic moves followed by the gigantic moves up and down and up and down, and then this big move back up. But even in the big move up, you got these big oscillations. Okay, and this is what's interesting, Brad. If you look at the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days, 13 the number. Look at the last 3, big negative, 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 even though it's going up, you know what I mean?
So yeah, those are super tough, those types of days right there, right? I mean, if you're doing that intraday type of activity.
Well, that's what I'm trying to tell you is that, guys, we specialize in the intraday finds, right? But this is what we're going to get to. We're going to break that apart. We're going to showcase to you that you can do so much more with Holly and the AI. And the fact is that, man, if you don't have it yet, you're going to really want it, because I'm going to be showcasing to you guys visually, and we're going to talk about how well the AI really does and some of the things that we're not showing you, and I'm going to be talking about that today. So here we go. Here's how the AI performed today. I'm not going to jump into all of these trades. You guys can see it, except for Brad. This column's not available yet, right?
Yeah, that's not available. It's a new risk mode that we're going to be unveiling. We can talk a little bit about it, but we've redefined a little bit of the risk on profit. We've changed how that's calculated. So this full risk mode is very much a complement to that change that we've made.
And I think from that point of view, what we're trying to do, guys, is we're never trying to specifically showcase us doing the best. We're not trying to paint the tape with results, but we want to show you all the possibilities. So, but Brad, how would you describe full risk on? You're just staying in all
so full risk on is not looking at any of the stop values that we have. It's essentially holding any of these positions to the close. And while risk on used to be a little bit like that, we've augmented it so that it looks more closely to the stop. And if you happen to get stopped out, then that particular P&L value is going to stop functioning. It's not going to continue to calculate. So, but the full risk does give you the ability to kind of take a look at a very pure type of mode. You know, that's if you're holding absolutely everything, how is it really doing to the end, regardless of whether it hits a stop or not. So it'll keep tracking down. If it's running through the stop, it'll continue tracking if it runs through the stop and then comes back and turns positive again. So just another way to look at it.
Right, and we kind of used to do that when we used to say, okay, so if you're stopped out, you're not gonna.
It allows us to offer a more accurate P&L to everybody. But the reality is it's a great column, because if that stock or when that stock continues to move or reverse directions, if you're used to looking at things from a P&L perspective, and I look at it from that regard, it's much easier for me to monitor how something's moving by looking at that. So it's a continual P&L calculation, so you can start to see it reverse in direction by your P&L change in value.
Right. So as Brad said, that and guys, here's the thing: be prepared. You know, before we go IPO in 2020, and hopefully again that still will happen. Be prepared for all of this Holly stuff to change for the better for you. There is no finish line. We're constantly working on what is the best modus operandi, you know, because really it's about finding value. And I want to show you guys some things again that I was doing today, just so that you can see what was going on and how I myself am leading by example. But we'll get to that in a minute. So what I'm upset at myself about, and Brad and I were talking about this, I said to Brad, I said, you know, Brad, when you're only focused on the super short term, which again, we get, you know, people do that, you're not seeing the forest through the trees. You know, it's like you got your face stuck in the stock, you're looking at the bark, and you can't tell if there's like other trees around you, or maybe if there's a bear that's about to, you know, come get you. And what I mean by that is that, while again, we have nothing against short-term trading, we all do it, it doesn't really paint the picture of the full value of what you can get with this product. So I'm going to show you guys something. You know, make sure I pop out the questions so everyone's able to see. So the value of the AI, okay, is not simply short-term, because again, short-term value. Now look, today in risk-on mode, it was pretty decent, okay? And you had a mix, long and short, you know, in risk-on, all good. But we know that people tend to want to and not be so in and out of things, just because the mass market of investors is not trained for that, and we get it. Again, we already have the in and out and the day trading. We've had it from the beginning. But I want to show you something now that I think many of you might not even know. So let's get ready. And this is something that I really think we're going to be highlighting in our next open house that's going to be coming up soon. So I'm going to right click in this window. I'm going to go to history of the AI. I'm going to go to time frame. And I'm going to go to, so Brad, what's the maximum? How come yesterday I thought it was 64? Am I on the wrong server? It doesn't matter. 30 days is fine. Brad, do you know why?
Yeah, are you on the test server?
Is that it?
You probably are. That's okay, because you need to be in order for full risk to work.
Right, okay. That's all good. The demonstration. So I'm going back 30 days, guys. Okay? And here's some entry times. Now what I want to do is show you, okay, why people don't just simply only day trade, okay? So here you had a stock, and again, not everything works out perfectly, but just as an example, here you had a stock, okay? It ran a killer that day. I mean, and then since then, here we are. Here's one, 47, and again, this forces you to think bigger picture, right? We've had two buy signals on this one, statistical buy signals, and here we are now. It's kind of going, and that's the thing that I want to kind of showcase and make people see, that these things were always designed, and we've said this, Brad, many, many times. Every trade that Holly tries to get into, and specifically the long trades, because shorts are slightly a different animal in general, but the long trades certainly are all meant to possibly be trades you never get out of. So what I want to show you is that you can go into this history mode. Look at this trade right here. Okay, Scott's Miracle-Gro. Now this one, by the way, Brad, is something exactly like of what I am working on some of my other trades, because when you are able to find these types of value setups in the short term, but then be in them in the long term, this is a situation where, you know, again, you may not have to exit. And not having to exit is the win. Okay? That is the win.
Yeah, it's establishing a nice price both in the intraday and in the long term. And if you can find both of those, the risk is just a lot less.
And then it lets your money work for you guys. And that's the thing that I think many people don't think through when we talk about all of this day trading and getting in and getting out. Remember that there is the bigger picture, right? Which is the stock market is designed to create value for us. Value, if you find the right value for your entry relative to others, and then that value grows. So let's look at another one.
Well, to this end, Dan, you know, one of the things we're working on in the development side is taking this and bringing a more real-time element to it. So you get the benefit of these historical Holly calls, but you're going to have more of a relative understanding as to where that stock is right now, and be able to choose, you know, what's the best mover of the week or of the month, of the year, and have access to this data and being able to manipulate it a little bit more readily.
Well, the other thing too is that, and it's not without, you don't just like buy and hold and forget about it. Here's the thing. There's a buy signal here. You would have had to have been stopped out, you know, use risk management. But here, when you bought it again, you might now not be stopped out. And potentially, again, if we get above this level, you could be in a run. And then you can see what it did before. Look at this move. You know, so that's the whole thing, ladies and gentlemen. You have to, you must, for the maximum value, you have to peel away the pure day trading definition of it, because that gets you stuck. Stuck in being here for one day at 16 and then not being here at 24. And we want you, I mean, this is again, January, we're only 4 months in, it's a pretty nice percentage move. If you're looking at blackjack perspective, right, you can almost say buy, add, add. You know, imagine 50 shares, 50 shares, 50 shares. Now you have a net position of 150, and you know, you've been accumulating it as it's been moving on. It's like a statistical accumulation. So yeah, I'm talking about longer term time frames. I'm going to avoid the shorts because again, they're a little bit trickier for people, and the market is designed to go up. So let's keep things in perspective. Let's see, that's 411. But at the same time, you have to keep your stops. Okay, so here's an example where it went from 147 to 150, but came back. Okay, and went through the swing stop, which is why we have it. So these price points here are for you to think about, that there's more to positioning this trade and these stocks to get yourself possibly into a longer term situation where, again, the bigger game for everyone is being in something that you can get into, like let's say this area, right? And then it breaks out and makes new highs. So let's just keep kind of going through a little bit of this example. Here's another one. Again, oh, I was just on this one. So here's one, therapeutics, where it shows you have to have the risk management on. And that's the other thing where I'm saying that even though we showcase to you that, you know, these signals are at the time breakout signals or statistically viable signals, if you are not paying attention to the risk, if you're just sitting in there and putting the blinders on, well, you could potentially be in a whole lot of hurt, which is not anything that we ever want. And that's something else when you're in, and also obviously you have to understand that when you're in stocks like biotechnology, okay, like these things tend to be incredibly volatile. I mean, you're talking about from 8 to 2, and now in a relatively short amount of time going at it again. So opportunity and risk together, but the thing that we want to showcase, okay, and tell you what we're working on is being able to be in the longer term plays for you so that you can stay in them possibly, and at the same time not only be pulled in one direction or the other on the with the day trades. Now what you're going to get from this is there's also going to be an equity curve to all of these trades if you were again still in them and not stopped out. And of course on the stop outs we will also be adding the re-entry. So what you're basically hearing from me is that it's like Holly will have, of course, the day trading mode. This is what it is right here. That's what you see every day. But she will also have another mode, which is the swing mode. And the swing mode is that every trade that you are in, you can be in a swing trade situation. So like, for example, if I go back to real time, okay, and I'm in, so here I am in ACMR today, which was a good trade for Holly, okay? So depending on your particular risk, like right now we have this standardized thing called the swing exit. Brad, we've had this for how long?
Probably about a year now.
Yeah, probably a year. So this swing exit is designed to help you see through the bigger picture and say, look, if you really want to stay in here, okay, and not be buckled, because you know you can expect volatility, then this is the exit. But what we're going to let you do, and what we're going to have the computer be able to do, is start working on optimizing the swing exit itself too. Because again, right now it's a general hypothesis, and what I mean by that is while we show you what it is, and it's a computational number that we figure out, we don't do a lot of optimization with it. And you can imagine that some things like this, you know, they also can be optimized and improved. So the net of what I'm trying to tell you guys is prepare for Holly in full swinging mode. Okay? Are there any questions about that? So and again, you can do this with all of them. So you can go to yesterday's trades and see, like, so how did yesterday's trades perform today, for example? And obviously, again, today when you have a day like this, you can sort of see what could have possibly happened. And you can also go like specifically. So let's say 7 days. So here we are from the 10th.
We'll go ahead and sort on that column.
Did I or didn't I?
No, I think you had it sorted on risk on, right? So you can sort it on that. And
well, the thing is, right now, as we're making, I mean, we're really developing as we speak. So this number is what it happened then. This was the entry price of DocuSign right here, and that was the profit that day, and it was a target hit. But since that day, it had gone up higher, but then pulled back hard. I believe that's today, right? Yeah. And again, it's not necessarily specifically supposed to be super easy. That's why I was saying before, trading is war, and a mental warfare and a little bit of a spiritual warfare too, because it tests your nerves. But what we're trying to show you is that we're working very hard for you to be able to get into things and be able to stay in them with the tailwind. And there's even a strategy called tailwind, but the idea here, this is something that I mean, screw this up. So GBX, I think, Brad, this was when possibly I got into that one on my end. Let me take a look real quick. Yeah, very, very close to that level. So let me show you guys. I'm going to kind of bring this in real quick. So this is me working in this same kind of mode, testing these hypotheses for you guys in real time, doing both swing trading and at the same time position trading and day trading together. Now today I actually had some internet issues in the morning, so I did not have Holly turned on, but I had a lot of things that I was in, and I want to show you how I work it. And again, part of what is possible, because all of these trades I think pretty much were on the AI at one point or another. One of the things that I was able to be in, and this is one of the best things to showcase about what is the potential of the tech and what it can do. Okay, so notice my exposure, $14,000 in a stock called CPS, and this was the signal right here, and it was on 326. And again, remember, I'm not saying that this works all the time. I'm just saying that it is a trial and error process. Okay, so here I got in, and actually I think I only got into 100 shares, but then I added a little bit here, and look what's happened since. On 14,000 shares, right, I have open P&L of almost $3,000.
300 shares, $14,000.
Sorry, 300. Sorry, I can't speak. Okay.
That's all right.
And at the same time, I'm trying to show you guys too that I'm sort of doing this for all. So my job here, like a Trade Ideas, right, is to be the race car driver. I don't need to have Holly day trade for me all the time, because I've already done it. I do that. We have other people doing it as well. But at the same time, I am trying to lead by example. So I'm showing you guys that I take these trades and I'm using the same kind of hypotheses and theses that we talk about in the trading room, which is, if you look at the overall open P&L, okay, you can ask yourself, well, Dan, surely this looks terrible, right? But remind yourselves, and I do want to talk about this one again, because this is something that Brad and I have discussed on last webinar. I want to show you, because you're here you're here to learn something, hopefully, and part of that is the information conveyance process. I want to show you something that is really interesting, because we track this. And Brad, what is this number right here? Are you okay? Brad's talking in the mute. Do you guys see this? This is called the short float.
Short growth. But you got to make it a little wider, right? There you go.
So short growth and short float. Okay, so let me tell you what this, again, and we have a whole channel, by the way. Let me move this out of the way for a second. See this? Brad, we might need to change the icon of that channel, if you know what I mean.
We did that a while ago, didn't we?
We did that a while ago when we were young.
We had one eye open.
One eye open. We didn't know what they were doing. But okay, but we have talking about the float. Okay, stocks that have a low float. Now this isn't specifically low float related. Although, I mean, you can see a low float could be like 10 million shares, 5 million shares. There's very many interesting, and we'll go to that channel after I'm done on this. But what I want to show you is that here's a float of 172 million shares. If you can compare this to Facebook, and just for perspective, Facebook, okay, has a float of 2.38 billion shares and has a short float of, no one's short Facebook, not allowed to be. And if you were short, you get punished, and you have to stop that. It's not allowed. Here's another example, IBM. I mean, just for comparative purposes, a float of 889 million shares. Okay, short growth of 12%. Brad, that's almost interesting. You know,
Why is that?
Well, it's because it's interesting. Somebody's putting on some shorts on IBM, and look what happened. So you can see that. See, this is short growth. That means that the people that are probably playing this move are speculators versus investors. So as we were talking about trading being a form of warfare, and by warfare, I mean, I'm not saying killing, although listen, you guys have heard the stories of people jumping out of buildings, you know. This is a situation where be informed of what you're getting into. So here, you've had a short growth of 12% in IBM. So people have been speculating on its downside. That's all I'm saying. But compare that to the short growth and short float of U.S. Steel. Okay, so U.S. Steel is the biggest employer of people in Pittsburgh. They make, obviously, steel. But somebody really, really hates this company, which is why I am in it. I like taking the other side of speculators instead of investors, because speculators are not in it for what you would call the longer term. So their speculation is typically focused on a very short period, very short time frame, and we are at this point in the stock where, again, if you go back, you know, when it got close to this area, and this is a swing exit that gets adjusted, but it was around here before, okay? And when it bounced from here to here, we're talking about a very large percentage move. And that's really what I am playing here, okay? I'm playing the same kind of concept, playing against the short sellers, because if this starts to run, they will have to panic because they will need to cover, okay? And at 10%, you're talking about 17 million shares of X is short. So basically a whole, every short seller, if every short seller covered, it would take 1.44 days without the buyers there. So these are, you really do want to be able to know and kind of possibly take advantage of it. And Brad, since you and I have been looking at stocks, I mean, and we'll kind of scroll through here a little bit, you can see short growth. Some people are putting on shorts, but typically a growth of 43% is just very, very unusual. You know, a lot of times, again, you see something more like they're in panic mode because shorts are not in it for the long time. Okay, so I want to make sure that when you guys see what I'm doing here, okay, and notice that I would not be in here down this much if I did not have this to balance it off. I am basically building, you know, kind of like gardening. Brad and I used to talk about this a lot. Building a garden, letting it grow, growth of your own positions, positioned properly through the artificial intelligence and through sorting. So this is what we want you guys to be able to understand, is that you can get a situation like CPS through Holly. So if you had gotten out of that trade, let me take a look, what happened? In fact, this is kind of interesting. Look at it.
Down what, 29 cents?
Down 29 cents versus, do you see, guys? That's the game. That's what it's about. So here's another example of something similar. Okay. This, and here we are. And you can find these opportunities because they are, like, as I started to look at CPS, so let me tell you just real quick, because I'm no genius. Brad can attest to that. Scott's laughing as we speak. CPS was a signal, you know, and I started looking into what this company was doing, and I noticed that this is about manufacturing car parts and things like that in Michigan. And US-based manufacturing is said to be on a very, very big upswing. Okay, so when I saw this and I got into it, that is actually what made me look at X and GBX as the same thing. Greenbrier, I mean, I believe that's railroad rolling stock manufacturing. So these are people that are making stuff. They have revenues. So again, you can do all of the fundamental things really quick in this type of window where you can say, okay, well, they're making revenues, they're doing things, you know, is this possibly oversold? And then you look historically and you're like, huh, wow. You know, it's a pretty big move here from February to where we are right now. In 2 months, that's a gigantic decline. So I like to, I mean, this is kind of going back to something Brad and I had mentioned many, many times, mean reversion. You know, saying, hey, this thing is overdone. Now, Brad, let's do real quick. We have indicators in trade ideas. Don't forget that. So I can add, like, let's say, moving average. Where's my moving average? SMA.
SMA.
And so, Brad,
yeah, remember, you have the development. You're so funny, dude. We do this every time. But just hit OK, and then you can modify it if you want to modify it.
Okay, there we go. So this is the 20-period SMA, right?
That's correct.
Okay. So I can look at this, and again, I can say, wow, look at all these days that this thing has just been below its, you know, some standard hallmarks. By the way, you can create lists of stocks like this, and I'm actually going to give out one at the end of the webinar where I've done some value stuff and show you what I'm doing. But the notion is kind of simple. What happens on the possible and also, remember we talked about the Holly? I mean, it doesn't just go on the long side. I caught this one because the sell was so good. I was like, wow, look at this sell. This sell to me, Brad, was analogous of this buy.
It is. I mean, and you got to remember, those are wonderful, wonderful opportunities. They're not. It's not the norm to never be feeling any pain at all, right? But those are beautiful when you don't have to.
No, 100%, and that's what I'm trying to say is that these are the things that Holly is hunting for all the time. All of these trades that you see that we show you, let me scoop my P&L out of the way, like all of these things, like this one, you know, they're all designed to be some sort of version of that. Like when this one was bought, you know, there was a big pullback, then it ran up really high. You know, again, the future is not predictable. It's reacted-to-able, if that's even something. I don't know if that's a word. But the whole notion I'm trying to put in here on what we're doing with the AI is that we're trying to find these entry points, these opportunity points, so that you can then take both sides. And here you have this beautiful sell here, and then you have the quarterback buying on the 10th, which was, you know, and again, because I have the development version, you don't see everything on my screen. You guys have it. But the idea here is like right here. Okay? So look at that. A sell right here, a buy right here. If this goes, I mean, these are the types of things where just one of these can make your whole year. I mean, you guys have to understand that's part of the thing, is that because costs to get in are so low, you know, it doesn't cost a lot of money with IB and even some of the online brokers. And in fact, this style, you could do it on almost any brokerage because you're not getting in, getting out, getting in, getting out, getting in, getting out. You're letting your winners run. That's really the whole notion and approach that we are taking right now, is letting the winners run. How do we do that? Is it possible? You know, I'm using myself as the guinea pig. Yes. Yes, it is. And again, remember, the 5,000 comparison is just not a fair comparison to these because of the numbers of shares. But if you look at the charts, too. And I want to be able to, so that you guys can see what it is that I'm doing, because it's no secret, no surprise. Look at Stamp, Brad. I mean, that's another one. So here you go.
I mean, you want to look at where the stock has been to give you a sense of where it can possibly be. It's not any guarantee, but boy, it's got some potential.
Well, and that's the thing, right? Potential energy. I mean, you're talking about physics, you're talking about all of that kind of stuff. And I'm specifically looking for that kind of potential energy and to unleash it on my portfolio. And I'm trying to show you guys that even with 100 shares, you know, you can get into something like Stamp where possibly, again, you know, it's been so beaten up, and I don't know the reasons. But if it does have a turnaround, for some reason, this is something that you can put away. And there's nothing wrong with that, because that's what the big guys do, right? I mean, Bill Gates doesn't day trade Microsoft. Okay? So here, hopefully you guys see that I'm trying to, again, lead by example, use my skills of trading. At the same time, you know, it is an art form, both combination of science and art. Here's PVAC, which is similar to that play on CPS and similar to the play on X, okay? And notice where it is, and you guys should be looking at these symbols, taking notes on them, hopefully, again, because you can dabble in them and say, okay, well, if this thing breaks to all-time lows, which is only a point and 66 cents away.
Hey, Dan,
well,
let's show some of the flexibility on that brokerage plus window by right-clicking on a position that you have. And so, you know, this is how easy it is to add a stop order, or if there was already a stop order in there, to modify it, a time stop. And I know Rachel was asking about having Holly choose different times, but it's ultimately up to you, and you have the ability to act upon any of these signals manually. You can also set it up to do it automatically, but you're also at that time going to define certain parameters. You know, are you going to trade it for the time stop? Are you going to trade it to the end of the day? Are you going to adhere to stops? These are all the things that you have a choice in choosing, but at the end of the day, you can completely let Holly get you in, and you can take it over, you know, take the management of that position over as soon as you want. So it's very flexible like that.
And what we're really working on right now, again, this is why you get the, you know, I'm not afraid to show you, like, here's a P&L. And by the way, I mean, my account is an account that it's a little over 100,000, because again, I test a lot of things and I work on a lot of things, and I am trying to be profitable. But this type of P&L is something that's okay for this type of account. And remember, you're trying to think bigger picture. That's what I'm doing. I'm putting myself in your shoes, okay? And I'm saying, okay, well, this is what's going on today, you know? How's that in terms of the bigger picture? So you can then say to yourself, well, these guys right here, you know, they're all in pre-bake mode, if you can imagine. You know, like, that means I put these on, but like, really, you can almost say that nothing is happening. If you trade a position like this for $94, well, then you're potentially missing the bigger picture, which is, again, the bigger picture is this. So we're trying to find more of these for you, okay, through a pivot point type of approach. And look, it's happened before on here. Let's come back, and that's my whole point, is that, wow, look, it touched it, went up, came back. What if it really starts to go now? And then once again, you're looking at, notice this original buy point from 2018. This goes back to, you know, the initial part of the discussion. This buy point right here, not that long ago, right? March 2018 at 35, this went up to $94. I mean, that's what makes me so pumped about what it is that we're doing and the value, and why you must look at the history, okay? This is why this whole thing, this whole mode that we're trying to show you guys is, hey, history, and we're going to display it better. Okay.
So hey, Dan, let's I want to show Rachel something, because it kind of It's something that she's been asking. Minimize your brokerage plus, and let's focus on Holly Neo, that window down below, the bottom one. Yeah, and just hit TME. Let's hit that symbol and load it up in a chart. And I want to explain the way that we look at a particular signal that's generated. So in the morning at this on 4/17 at 7:26, this particular signal was generated, and it gave the exit that it gave was a time stop, and you have the choice to get out when it does a time stop. But we have other algorithms that are in place, and maybe that stock pulls back too much. Well, we've got a profit save algorithm that'll kick in, or maybe a stock's been kind of meandering around and not doing what we thought it would do in the time that we thought it would do it. Well, then we'll get a reduced risk type of algorithm. So it's another exit. But again, you have the choice, and we provide you all these different P&Ls so that you can see during the day, what's the best way to trade this segment? Should I be getting out pretty quickly because there's not a lot of follow through? Or maybe there's a lot of follow through, or maybe there's so much volatility that your stops need to be adjusted a little bit because things are just moving so much. And so we're providing you all these data points so that you as a trader can determine how you want to use this information to your best advantage.
Because we do not have insight into what is your account size and your risk tolerance, and ultimately all of us want to be in a situation where, I mean, this was a great trade where, you know, got in and perfect play. But ultimately it gets a lot better if you can break out to all-time highs and keep running. You know, so you can say to yourself, wow, maybe this is where, again, I initiate here, and if it doesn't go below here, I add and hopefully go for the breakout. I mean, this trend is certainly up. So that's the layering that we're kind of working on for you guys right now. And I am constantly, you know, working on trying to say to myself, how do I make this, right? That it's more relatable to not just me, but to everybody. And this is just another one, Brad, this is such a good example of it here, March 26th, right? Imagine you bought it at $55, 100 shares.
You'd be up 82 cents at the end of the day. And that's, you know, we want you to be positive at the end of the day so that you're in a much stronger position to make your choices of what you want to hold. If you're not, you're in a much weaker position. So right, the idea is positive. Right,
but having been in here, you would have had to have a little bit of risk. But look how close, this is one of the things I loved about this signal. And again, we're going to be adding this data for you. But notice this entry signal is pretty close to the swing exit of today. This is the kind of thing, but also close to its moving average. So like you can imagine that if you, what I'm trying to say is that if you were in here initially, okay, how do you stay to today? That's the question that I am working on through these experiments for us. Experimenting and putting the data science in here, you can imagine something like this. And we've said this before, but you know, just a very high level example. So let's say we add something called the swing stop. Brad, and I'm just using an example of this. We were already talking about making the stop something that you can modify for a little bit, giving yourself more room. So in this case, if the swing stop was yesterday's low, so you got in today, I mean, you won, all good, it was a great trade, but your swing stop then becomes yesterday's low, or something close to, or some variation between that and the moving average. Well, then you are now then positioned to stay in this trade longer term and ride this wave. That's what we're trying to do. We're trying to get you into this wave. Does that make sense? That is the significance of the history, guys. That is what we're really after. And again, make sure you understand that we're not messing around with, you know, paper trading or anything. This is real money on the line. Okay? Real risk, real money. Otherwise, it doesn't work. And I don't know who else does what we're doing. That's why we hope that you work with us, because we are in it to win it with you too. You can join me on, like, again, you can take screenshots of this portfolio if you want. I mean, you can join me on anything here I invite you because I'm in it, but of course I will be managing my risk, as I always do. One of the things that, let me see. So here's another one that I want to point out, that I'm looking for the mean reversion kind of trade, because when it happened here, it blew up. BAK, so take a look at that one. It's another interesting one. Let's see here. Okay, we already did that. So, thanks, Mike. So that's really today. If there was a summary for what we want to communicate in today's Q&A, it is this: look at the AI history. Let me see, so you can duplicate a window like this. So imagine you do something like this, and you go to time frame and you say, Brad, how's this happening? Why, computers mess with me, don't they?
Yeah, I don't know. I tried it after you were only getting 30 and I got 64. I didn't want to say anything.
Okay, that's all right. So guys, take a look. So here, just another example of what I'm doing. View mode. Let me pull this over here. So you can duplicate any window, right? I'm going to move this window here, and here you can see, I mean, again, you can see what it is that we are doing. Here was the initial buy signal. This one didn't work out. Here's one that worked out, looks like pretty well. I mean, you gotta love that one. This is the kind of difference in being able to work with this data, look through it in this manner. And again, I really am suggesting, guys, take this entry price and start combing through this for your swing trade ideas. This is what they are for. These are the things that people are missing that are right there in plain sight.
And one of the things you haven't mentioned, but it's a really great way to use this particular window, is you can just highlight it. Once you've brought in 64 trading days of data, he's brought in a quarter's worth of data right there. You can just highlight that, the symbol column, create a, just highlight it, drag it down right there, and hit Control-C on your keyboard. You copy it, create a symbol list, and you can bring it into a top list. And then you can see, God, what moved the most today? What moved the most over the week? And give yourself a lot of, it's what we're going to be doing here for you here shortly with this window, bringing in some real-time components to it. But this is something you can do right now and take this data and really allow it to kind of shine for you.
But it also tells you, like, if you really peruse through here, you will see, I mean, there's a reason why I'm showing you this, guys. I mean, I just want to make sure you guys know, because it's good. We've looked through it. The winners are very, very good. Risk management works, that we say, whether it's a swing exit or your, again, whichever exit you use. But the point is, because the costs are low, I mean, guys, look at this right here. Don't make me get mad. Brad, why am I not in this?
So that's why you're mad.
I'm mad because Brad keeps making me day trade. Do this, do that. But look, guys, I mean, this is what it's about. So look at this. So remember, when we've been working with you guys, we've been saying, don't listen to the people that tell you that 5% is good or 7% is good or whatever. I mean, look at these moves. Here you have a move, and from February to April, that's up basically 100%. Okay, and you probably would have never seen this stock. It's not going to be on CNBC. It's got a float of 34 million shares. This is what, okay, so, Brad.
Dan.
So look, guys, remember I tell you, like, that it's kind of fun to get to bet against the weak hands, okay? And what I'm trying to do with, and again, I'm not saying I'm going to win. I'm just saying this is my attempted play. So look at X here real quick. Short 41%. You see it? That means So people are just betting against U.S. steel. Okay.
Well, to be fair, you have a fundamental component that you're playing as well, I think, too, right? I mean, this is not just technical.
Fundamentals, guys, is silly. I mean, there's all these people that can say you can throw away everything and go to price and whatever. And yes, of course, you can try it that way, but then you do miss some of the picture. I mean, you know, for example, is this company making money or can it go bankrupt tomorrow? I mean, that's the simple question that you can ask yourself. But we know that here, GTT, where is that there? When you've got a short float of 36%, okay, and this thing doesn't trade a lot of volume. See, so see, like that's the other part of the mystery being revealed here. So this is not that active of a stock. Okay.
No, it's 500,000 shares, but it's 2 times its normal average. So you got to figure on average it's doing 250,000, right?
Right. Look how many days to cover if all the shorts get out. Brad, I can't take it. I honestly can't take it. Guys, I mean, you should all be looking at this stock. This thing could keep going. So this is what happens when you're like, you know, this is kind of like being on the smart, you know, what are those, that movie, the Big Short, or they call Liar's Poker, where, you know, the smart guys all get together and know what's going on. Listen, these things, this is an unusual thing. Okay? And look at what's happened. It's like someone keeps betting against it and getting killed. Okay? That thing could keep going until somebody gets rid of this short percentage significantly. You could see this thing run. I mean, you can go all the way back here. It could go all the way back here to the initial buy point, right? So see here, our Holly, you know, she's not emotional about this, and she does not. I mean, she takes in fundamentals, but it's a pure speculative card counting play. It looked like it was going to go. That didn't work out. But then 2 sell signals. Okay. Now, I'm not saying, again, it was easy, but from the point of the sell signals to the low, that's 100% right here. That means you've got to be able to position yourself the right way. That's what we're working on helping you with. But here, you know, I'm just telling you, the buy signal, GTT, and with this kind of tailwind, you could see some amazing things. And that's why, and unless you were looking at the history, right, you wouldn't then have confidence in, you know, some of this. I mean, this is another one of these things. Again, it doesn't have the same short and stuff like this, but light truck, I mean, this is the whole, somebody's trying to bet against the U.S. and their manufacturing, and what we're seeing is the opposite. And you can see, I mean, I'm probably going to get into this. If I'm not in it already, I'm not. But I'm going to make a note right here. I'm going to say get some. And this is the other way you do it. Simply set a price alert. So, see that? I just set an alert for here. You know, because I love things like, if you notice, like, again, there's a beauty in being able to be in something, let's say 200 shares, right? And having it do whatever it's doing, and the swing exit is only a point, basically 2 points away. So if I'm in 200 shares and I don't do anything and I'm out here, it's $400. I can handle that, but what if it turns around? I mean, come on. I mean, Brad, do you not love that?
Yeah, it's all about risk reward.
It's about the risk reward, and I love when something is like this. See, like the consolidation close to a swing exit, Brad. We might want to put that in. But anyways,
I think that's your defined trading style.
Yes. So listen, let me get back to the presentation. We've shown you guys a lot, but the biggest thing that is the history, the AI history, okay? If you're not using the AI history, you're missing like 90% of the whole value of trade ideas. Okay, use the history when you see something. Like, for example, let's say you were in some Holly trades today. You can go in and then set alerts and say, oh, okay, this is working now. start using the alerts. Use that. It's like going to the gym. Instead of doing your aerobics, do your mental aerobics this way. For those of you that are not subscribers, and I know all of you are, okay? But for those that are not, there's probably 1 or 2 people here that are not. We have a discount for you, Holly Spring, all caps, 15% off your first month, or a year of trade ideas. To give you a perspective that we are the only AI-generated buy and sell signals and ones that actually show you the P&L. In other words, we are backed up by our performance that's being tracked in real time. Nobody does this in the industry of Wall Street. So think about that. And we cost $3.09 or $2.09 for our monthly and yearly on a per diem, and a little bit more for our premium that has the AI and the brokerage plus and all the things that we've been doing. Ladies and gentlemen, I mean, there's just nothing like this on the market. There isn't. If you aren't one of our affiliates, we suggest that you should be, because that's one of the ways that our affiliates do really well, and they help us and we help them. When we go IPO, our subscribers and affiliates will get shares. We have a trading room with Mr. Barry Anderson, who is probably in here today helping you guys out. Barry is a wonderful moderator who shows you how to work the system in real life situations. People there put real money on the line, just like I'm doing and showcasing to you in my in this window right here. And somebody just bought some X because my P&L changed by $300. See, guys, we're winning. All good. That's what happens, you see. Really nice. It's down 600. Somebody did some after hours trading. So Barry's there. There's lots of support, a meritocracy that helps everyone. My friend Jamie Hodge and I, we do a podcast on Fridays, the Friday Trade Ideas podcast, where we get super crazy with you, but give you a nice, human and humorous approach as to how we do trade ideas, and also disclose trends and things like that. We really hope you check it out, subscribe to that. We have other information to help you trade the short side that's not as intuitive for people, but we have information for you, and there's an ebook that helps you get started, all for free. And of course, very easy for you to get a hold of us on Twitter, Facebook, and all social media. We're active there at Trade Ideas, at QuantPod, at Today Trader. And of course, if you need to, send us an email. Shoot an email to info@trade-ideas.com, and we'll be very quick to answer. Scott, I think that's it for the presentation today.
Yeah, sounds good. We'll have a recording up later on tonight or tomorrow, and there'll be a follow-up email from GoToWebinar with a link to the playlist.
Okay, thank you, everybody. Take care and have a great day.
Thanks all. Bye-bye.
Bye, everybody.